NVIDIA just hit a market cap of $5.7 trillion, and Jensen Huang was invited on Air Force One to go to China to negotiate deals. So what's going on? Well, in this video, we're going to go over the latest news, the fundamentals and technicals, and we're going to find out whether today is still a great buying opportunity for the long-term investor. So buckle up and let's dive right in. So what exactly is NVIDIA? NVIDIA has always been a GPU designer, a graphics card designer, so they design these chips to make these cards, and they used to sell these to gamers or crypto miners. But now there's a whole new demand in AI, and we can see that now they sell the majority of the products, the data center products, to accelerate the next wave of AI innovation. So they sell all these hardware, like for example the NVIDIA Vera and Rubin, to businesses that want to run AI workloads, and they sell this hardware together with the CUDA software, and this is a great business model. And they're essentially selling the shovels during a gold rush, which is a great business model. What's also really interesting is that NVIDIA hit the market cap of $5.7 trillion yesterday, which is insane. It's the number 2 when we look at the top assets by market cap, and it includes public companies, precious metals, and cryptocurrencies, ETFs. So it's on number 2 behind gold, but it's bigger than Google or silver, which is insane. And a lot of investors are thinking, it's so big, can it grow bigger? Well, we're going to find out in this video. Why exactly has the stock been so bullish lately? Well, here we can read exclusive. US clears H200 chip sales to 10 China firms as NVIDIA CEO looks for a breakthrough. So what happened? Well, Jensen Huang, the CEO of NVIDIA, was invited by Trump to go to China to negotiate deals. Because if NVIDIA is able to sell these chips to China, then they can sell to a whole new market, which can increase sales and revenue, and which can increase the intrinsic value, which we can talk about later. So they are going to sell like this chip, the H200 GPU, which is one of the most advanced chips for the data centers to run AI workloads, which these Chinese companies want. So we can see that they approved Chinese firms, including Alibaba, Tencent, and ByteDance. The US cleared. But the deal's not 100% done. We can read here, but not a single delivery has been made so far. 3 people familiar with the matter said leaving a majority technology deal in limbo as CEO Jensen Huang seeks a breakthrough in China this week. So they're still negotiating because China is still thinking about not approving because they want to protect their own chip manufacturing. But NVIDIA has like the highest quality and the best innovation. So it's not a 100% deal yet, but I like the direction that this is going. And if they can release the tension between the US and China, and they can have more of an open market in both countries, then this could benefit NVIDIA greatly. We're now here looking on TradingView, we're looking at NVIDIA, and this is one of my best positions in my portfolio. I bought like 3 years ago, but I decided to buy even more at 197. But why? Well, we can see here on technical analysis that all the exponential moving average are sloping up, and this is like the beginning of a new bull market. If we just look at the technical analysis by itself, now it went all the way up. Now it seems a little bit oversold, so it's better to wait when it comes back to the moving average to enter a position. But I personally bought here more because I think despite the high market cap, this company has still a lot of potential, and I think it's really undervalued. But we'll talk about that later. Is NVIDIA still a great fundamental company? Well, I believe it's one of the best in the world, and even Guru Focus gave it a score of 100 out of 100, which is very rare. And if we look here at the financial strength, is a 10 out of 10. We can see that all ratios are in check. And if we look at the profitability, it's also a 10 out of 10. Like everything is okay. Like every financial metric you look at, it looks good. It's like, it doesn't even matter what you're looking at. It's just a great company. We can see that revenue increasing exponentially, net income increasing exponentially, cash levels increasing exponentially, and the debt levels are really low compared to the cash levels. So they're also not taking a lot of risk. They're not taking a lot of leverage. They're just making a lot of money. If we just look at the quarterly, we can see sales even in the quarterly, we see a exponential line. So this company looks really, really great fundamentally. A lot of investors have the feeling that it's too late, that this stock is already too high, market cap is too much, and that this company could be overvalued. But is it overvalued, or do we still have a margin of safety? Well, we can look here at the price to earnings ratio. You can see it's 48, which is relative. It's not too high, but it's pretty high. But if we look at the earnings per share for the next 5 years, it's like 40%. So they expect the growth to be very strong every year. And if we look at the past, it was even higher, like at 200%, which is insane. And that's why we can see that the PEG ratio is below 1 and it's in green. And that can show that this company is still pretty cheap, which is very interesting for the long-term investor. So we know that the PEG ratio is below 1 and it's pretty cheap, but how does it compare to the competitors? Well, if we look, we can see that it's undervalued compared to the peer, because we can see that the peer average is 1.12, and we can see that competitors like AMD, Intel, Broadcom, Qualcomm, Taiwan Semiconductor is pretty cheap if we compare it to them. So NVIDIA looks undervalued when we look at the PEG ratio. Based on PEG ratio, it looks interesting, but the more accurate way is to use an intrinsic value calculator based on Warren Buffett's owner earnings. So we discount all future owner earnings to present value, and then we have the market value, that the true value. So the owner earnings is essentially net income plus depreciation, amortization, minus capital expenditures, and minus the change in working capital. This is what left for stockholders. And then we need to discount it with a discount rate, because money today is more valuable than money in the future. And we can type in here NVIDIA, and then we can fetch all the data. And we can see that the expected growth rate for the next 5 years is 40% with a discount rate of 5%. So let's make 8% to be more conservative and to have a lower intrinsic value. And let's use a terminal growth of 10. So the first 5 years, we expect it to grow by 40%, and then we expect the business to slow their growth and only grow by 10%. And this is more a realistic scenario. So if we calculate the intrinsic values based on these numbers, then we can see that it's extremely undervalued with a margin of safety of 44% and a potential upside of 79%. So a value score of 9.4 out of 10 with an intrinsic value of $423. So we can, it's almost double the current price. But let's do a little bit more conservative, and let's do like 30%. And then, so for the first 5 years, 30% grow, which is more realistic. And then for the terminal growth for the last 15 years, we're going to still use 10%. And then we can come to a intrinsic value of $296, which is a little bit more realistic, I would say. So, but it doesn't really matter what numbers we type in. It always seems to be undervalued, this company, because they're making just so much money. But but an intrinsic value of 296 is more realistic. So I think we can. So I think the true value is much higher, which still gives us a margin of safety if you look at the charts. But what's also important to know before we invest into a company is whether a company has a strong wide economic moat. We don't just want a discount like we have right now, but we also want to know how strong the moat is. So what exactly is an economic moat? Moat refers to a long-term competitive advantage that a company holds that protects its position in a marketplace. So during the medieval times, they built castles, and a castle with a strong moat, which is the water here, protects itself from invaders. So a strong moat protects the castle, and it's the same with a business. If the business has a wide economic moat, it's protected against the competitors. And that's what we want when we invest in a company, and it's really important for long-term investors. So this theory is popularized by Warren Buffett himself, and here we can read, investors such as Warren Buffett state that buying businesses is like buying castles. Buffett emphasizes the importance of buying businesses with deep moats, as they are protected from competitors and can therefore maintain strong profits. I made an economic moat analyzer to find out whether a company has a strong wide moat. So we can type in here the ticker, and then we can find out whether it has a strong competitive advantage. And NVIDIA has a wide moat with a score of 8.8 out of 10. And we can see that the moat consists of the brand power, the switching cost, the network effects, the cost advantages, and the intangible assets. And we can see that the brand power is really strong, as well as the intangible assets. So NVIDIA's brand is synonymous with high performance graphics processing and AI, commanding significant recognition and loyalty among developers and customers. And we can see here NVIDIA possesses a vast portfolio of patents, proprietary GPU architectures, and dominant CUDA software platform, which are critical intellectual property assets. And we can see the strengths and weaknesses. So dominant market share in AI and data center GPUs, proprietary CUDA software platform and ecosystem, continuous innovation and R&D investment, strong brand recognition and developer loyalty. But there are weaknesses as well. So high reliance on TSMC for manufacturing. So they're not manufacturing the chip, they're only designing them. So they need TSMC for these chips. And they have exposure to cyclicality in the gaming market. But the majority now comes from selling to data centers, so I think this is not too much of a risk. And intense competition from other chip makers like AMD and Intel. AMD is also a designer, and they also do pretty well. So there is competition, but the demand is so high that I wouldn't say that this is too much of a threat as well. But there's also potential for regulatory scrutiny due to market dominance, because if it's so big, then they get a lot of rules for selling. In short, I think that NVIDIA is a great company, and I'm not going to sell my position. I will just hold my position. I think that a bull market has formed. If we just look at the technical analysis, I think that the expected growth is really high. The fundamentals are insane, and it's still undervalued. So I think that there's still margin of safety. So I think that I'm expecting higher highs so we can maybe retrace a little bit back, and then we can go all the way up again. So I think buying right now give investors a margin of safety, and I'm very bullish on the company, and I think they will do well in the future. Of course, always do your own research. This video was just for educational purpose only. But if you like this video, feel free to like and subscribe. And if you want to support this channel, consider becoming a member. And if you want to learn more, check the links in the description down below. And with that being said, I hope you have a great day, and I'll see you in the next video. If you want to learn how to master stock analysis like a pro and find winning stocks and beat the market so you can build a portfolio that consistently wins, then feel free to check the link in the description down below.